Hi, I'm Randy McMullin with Amstar Mortgage Network. One of the questions that we get on a pretty regular basis is, where do interest rates actually come from? And one of the things that you'll hear in the industry is they come from a 10-year Treasury note. And while that's close, that's not exactly where they come from. They really come from a 30-year mortgage-backed bond or a mortgage security. And one of the important things about that is once we know where they come from, we can track that on a daily basis to let you know if the trend of rates is going up or if the trend in rates is going down. Now, I know that you hear that on the news on a regular basis, but we can look at it on a daily basis, and literally during the day, we can tell you if rates are going up or down during the day. Why is that important? Because if you're getting ready to lock a loan and you call us at 1 o'clock and say, hey, I'd like to lock in, we can look at the chart and sometimes advise you that maybe we want to wait till later in the afternoon, because if we get a price improvement, maybe it's just a quarter of a discount point, but on a $300,000 loan, that little waiting period could save you $750 in closing costs. And that's important to us as well. So if you look at the chart that we have over here, this is called a Japanese candlestick chart, and it shows you the ups and downs of the mortgage bonds. So what impacts the mortgage bond? What actually causes them to go up or down? Well, there are a lot of reports that we also track that come out on a regular basis, like labor reports, inflation reports, and gross domestic product. Those are things that kind of impact the rates. We look at that information on a daily basis so that we can give you the best information available so that you can make the best decision you can about locking in your rate. That's just one example of what we can do at Amstar Mortgage Network. Thanks for tuning in. We'd love to hear from you. I'm Randy McMullin with Amstar Mortgage Network.